Understand the last quarters, what has been the growth across segments like, if you, and more importantly, if you really expect this kind of momentum to actually continue for now and for the next few quarters as well?
Morning. Would like to give you the brief about our achievements in the Q3. Our growth primarily driven by increased customer demand in APIs and also in custom synthesis. While we increased our revenue to 1,288 crores, but quality of business was maintained. As you can see from our EBITDA margins, in the previous quarter, we had EBITDA of 33%. In the Q3, we were able to achieve 34%. We have very healthy order book, and our sales and profitability has nothing to do with stocking up because of this crisis or any price increases from our side. So there was a increased demand, our key APIs, and we are expanding our capacities. And we do expect the growth momentum in terms of revenue growth will continue. And we are also confident to maintain EBITDA at least 30% in the coming quarters as well. This we have commented in our last quarter results, and we continue to have the same confidence even now to maintain about 30% EBITDA for future quarters as well.
Okay. You know, when you, Dr. Chava, see such high growth numbers, do you think capacities are running full up right now? Would you need to invest more to try and cater to the demand that you're seeing?
We continue to invest in our capacities. As we mentioned earlier, we are in the process of a 1,200 crore capex spread over next 18-24 months. And the capacity expansion will come handy almost something in every quarter. So we expect to cater to increased demand because we continuously invest in capacities. But currently, our capacities are running at optimum. But we have inaugurated one backward integration block last month. And we expect to commence commercial production and additional quantities of API beginning March. And we do expect another API block will come handy by June this year. And by July, August, we have going to inaugurate our very large expansion project in formulations. So we have capacities coming for use spread across starting this quarter to next 7-8 quarters. So we are investing cautiously to meet our customer demands, and we are confident that we will be able to use our increased capacities very judiciously to meet our customer demands.
Sure. In the API segment, are you seeing a shift as well from markets like China? Do you feel that this is sustainable as well? Or do you see further competition, with some of those Chinese manufacturers back?
See, this COVID crisis is 10 months old, almost a year, when compared to the last year, January to this year. For markets where the supplies depend on the DMF approval, 1 year is a very short period to put somebody else into the dossier. So we haven't seen any growth in our API division because of this China plus one strategy as of now. But we see some positive trends. So future looks bright. We would like to invest more into capacities to meet our CDMO projects. We have seen more traction in CDMO projects than in APIs.
Okay. Fair enough. And the ARV API segment as well, and the kind of outlook you're foreseeing for FY22?
See, ARVs, this year we expect to have a very significant growth from FY20 to FY21. We continue to grow in a single digit next year as well in ARV APIs. But the other APIs where we do CDMO and also cardiovascular and other therapeutic segments, we expect significant growth. So API division surprisingly is growing beyond our expectations, and we are investing significant capex to meet the demand. So overall API segment is growing. Our capacities in formulations will become handy in Q2 FY22 onwards. And our custom synthesis project, we are gearing up to create dedicated capacities to the division so that they can cater to more number of projects. And that division is also performing very well.
Dr. Chava, if you could help us understand what's been the revenue contribution that you've seen, particularly in Q3 from North America and the European regions.
So we have to split that into APIs and FDF and custom synthesis. Our custom synthesis revenues are almost 100% coming from Europe and US. And in formulations, about 1/4 of our revenues came from Europe and US. And in APIs, maybe little more. APIs, our maybe 30% revenues came from Europe and US. So overall, our revenues coming from Europe and US is maybe close to 40% when you combine all the divisions put together.
Okay, fair point. Also wanted to understand what then is the outlook for synthesis business with the updates on the ongoing capacity expansions, if you could give us light on that as well.
We created a 100% subsidiary for our CDMO division, and we are building a dedicated R&D for the division. The construction work started, which is very close to our current R&D campus in Shamirpet, Hyderabad. We expect that R&D campus will be ready by early next year, which can accommodate close to 400 scientists. So that is almost adding another 50% of our R&D capacities dedicated to CDMO. When it comes to manufacturing, we just acquired land for CDMO division, where we will start construction probably in the next few weeks, where we would add 6-7 manufacturing lines to meet the commercial launches, which we expect will happen from FY23 onwards. So that division, we believe, has fantastic potential when compared to other divisions. We are giving enough focus to meet our objectives in the division.
Okay. In terms of margins as well, should we get your take on that? Gross margins for API and formulations, how they're trending sequentially. Gross margins in the quarter, if you can also talk us through that.
Gross margins were almost constant despite of growing our revenue significantly from quarter on quarter. That shows the kind of quality business we are doing. In Q1, we had about 55% gross margin, and Q2, 56%, and Q3, we did a little over 51%. And we expect that kind of gross margins we will be able to maintain because we are increasing our sales to advanced market like Europe and North America. In all the segments, we are supplying a lot of APIs to those markets. Our custom synthesis business is growing in those markets. And our launch of new products in Europe and North America going to increase pace in the next financial year. So we do expect to maintain gross margin. and we do expect to maintain EBITDA as well. That shows the operational leverage we are achieving by increasing the scale. So I think future looks bright. Yeah.
Okay. All right, Dr. Chava, I think we'll leave it there. So much to talk to you about. Thank you for joining us and taking us through in detail some of the developments there. All right.